Alrighty guys, what is going up? Welcome back to another episode. In today's video, we're going to be talking about the stock market. There's been so much volatility with it. We're going to be breaking down everything you need to know should you be worried. So I hope you guys enjoy it. If you get anything of value, hit that like button and subscribe. And if you guys want to learn more about investing in the stock market, go ahead and check out my course. And you guys can use promo code dividends to get 50% off. So at least check it out. It'll be the first link down below. And guys, we have some news on some merch. I'll be announcing that next week, but make sure you guys like and subscribe because a giveaway is coming soon and I want you guys to be updated. So make sure you guys smash that like button and subscribe. So now guys, to jump into it, roll that intro, let's go. Bam! So now over the past couple of days, there's been a couple of stocks that have pretty much gone parabolic. There's no signs of stopping them. The companies are GameStop, AMC, and BlackBerry. These are companies that have declining revenue, declining sales, taking on debt, not enough cash on hand. In my opinion, pretty much worthless stock, worthless corporations. Most of these companies have closing stores. Declining revenue, just a terrible combination. But the thing about it is these stocks are up over 1,000% in value, which is crazy. Look at GameStop. GameStop is closing their stores, and yet the company is worth $24 billion. $24 billion, that is insane in my opinion. The valuations don't make sense. But why and how did this happen? Well, for those of you that don't know, well, it's pretty much because of a Reddit site called Wall Street Bets. Really, what Wall Street Bets is, it's a Reddit site that a lot of very, very risky investors use. They will pretty much put their life savings into certain option calls or different types of investments. Now, most of these investments are very, very high risk, high reward. And some of these guys will make hundreds of thousands of dollars. But on the flip side, some of them will lose hundreds of thousands of dollars. This side of investing is very, very risky and I do not recommend it. Now, the reason why they picked GameStop, BlackBerry, and AMC is because these are some of the most shorted stocks out there. So really what a short is it's borrowing shares from your broker in hopes the stock falls down so you buy them back at a lower price. But the thing about it is there is no max loss with a short, because if that stock goes up and keeps going up, you are losing a lot of money. Because if that's, say you buy a stock for $5, the worst that can happen is it goes to zero. But when you short a stock, you could short that stock at $5 and then have that stock go to $350 like GameStop. And that's what happened. A lot of these hedge funds were shorting these companies and then they had to cover their shorts because the stock was going up. So then they had to buy those shares back, causing a huge short squeeze, it's called. And then a lot of people are saying, well, I missed out on this opportunity, I'm gonna get in now, causing this stock to go up even more. So right now, if you guys are looking to get into these companies, don't. They're very, very risky and volatile. If you look at GameStop, GameStop's growth predictions is negative 1,054%. So I do not recommend it. Stay away in my opinion. Now the second company that I want to talk about is the one and only Tesla, ticker symbol TSLA. Now the reason why I wanted to bring this one up is because the stock is falling. But is it something you guys should be worried about as Tesla investors? No, they had a missed earnings. Missed earnings happen all of the time. Just stay the course, do dollar cost averaging, use this opportunity in the short term as it falls down to average your price down. You guys will be fine. Even if this stock goes back down to $500, average your price down, there's still a ton of long-term potential. It had increasing revenue, it had increasing deliveries. The only thing it was down on was the earnings per share. Let's look at it. So the earnings per share was expected to be around 1.03, but it actually came out to be 0.8. So it was still close, but it just missed it by a little bit, causing a little sell-off in the stock. It's nothing to be worried about, I promise. So now the third company that I want to talk about is one of the most popular and most sought-after tech stocks out there with a market cap of over $2 trillion. We have the one and only Apple, AAPL. Now, we did get a little bit of sell-off today, but it did beat their earnings. Let's actually go ahead and look at the numbers. It had a increasing in iPhone sales, which is great because over the past year, it did slow down, so it's good that they are beating their iPhone sales reports. The second thing is they crossed over $100 billion. which is crazy in my opinion because this is just a single corporation in the United States. So it's crazy on how much money they actually bring in. But the revenue they made was $111 billion, and it was expected for them to make $103 billion. Still a ton of money, but they blew that out of the water. I definitely think Apple carries a ton of short and long-term potential because there is a rumor that they are getting into the electric automobile space. And if they do, this is pretty much them getting into another sector, making the company worth more money. So I do think there's a lot of potential there. It looks like they did file a patent for a electric charging station. I do think there's a lot of potential with that also. And then the fourth thing I want to talk about is the market's falling. Is this something you guys should be worried about? Absolutely not. I don't care what you guys think or what this next couple of years look like. Just follow the course, because over the past 90 years with the S&P 500, it's had an annual return rate of 9.8%. So if the markets sell off, use that opportunity to invest more because you will make a bigger ROI, return on investment. I definitely think the markets right now could sell off a little bit because of unemployment and inflation, but it's nothing you guys should be worried about. I posted a video the other day about it. I'll put that down in the comments. So now I still think a fantastic strategy for a lot of these blue chip stocks is dollar cost averaging. The reason why is because you don't have to worry about the risk. If it falls down, average your price down, just stay the process, stay the course, and you guys will be just fine. So I hope you guys enjoyed the episode, and if you did, hit the like button and subscribe. Do not get into these Wall Street bets, guys. It is very, very risky, and I would hate for you guys to lose money. I would rather see you guys put that money in a tech ETF or the S&P 500. Ah, man, come on, guys. All right, we'll see you guys tomorrow. Remember to stay happy, stay positive, and stay safe out there. Take care, everyone. Bam.